Zane, thank you so much for joining our podcast today. We're super stoked to have you on. I think you and I, correct me if I'm wrong, but I think we've probably been connected on LinkedIn. I don't know. I think I started following you a couple months ago and I've just been super impressed with what you're doing in the real estate space. But also, what caught my eye was it feels like you're a big believer in Jesus Christ, and you've kind of founded that freedom company upon his principles. And then also, you and I both play hockey. So Henry and I wanted to take this opportunity today and just have a conversation with you and just learn just more about what you're doing and what motivates you. And I think our listeners will learn a lot from you. And so just to start out, I'm curious if you wouldn't mind just maybe sharing kind of your journey growing up and specifically, in your beliefs and in playing hockey and in your family setting. Like, do you mind just sharing your background and how that upbringing has led you to where you are today?
Yeah, absolutely. Well, first, thanks for having me on. Excited to talk about life and all of the above. But yeah, my upbringing, I grew up in Dallas, Texas. Grew up in a family of believers and two believing parents who led me to the Lord and taught me principles of Christianity and the faith. And that was by the grace of God. I was born into that. I could have been born into a Muslim family in the Middle East, but I kind of ask why I was so fortunate to be born into that situation, but that's God's grace. Played hockey my whole life. Started when I was 10, so started a little bit late. And hockey in Dallas back then wasn't super big. I had to travel a lot for it. I moved specifically to play hockey for the first time when I was 14. So I moved up to Chicago with my mom and brother. We played up there. Then I moved to Albany, New York, Detroit, Michigan, and then ended up playing in Canada for a few years before I went to college at Liberty University. So hockey was an amazing ride. It led me to Liberty, which was a huge turning point in my faith. And, being born into and raised in a Christian household, you're kind of indoctrinated with the faith. So, I was told what to believe. I was told, hey, this is right. I was told these are the things to believe. But I think at Liberty, I really made my faith my own. And I think a lot of people kind of have that formative shift or, kind of those years, kind of late teens, early 20s is a is a really important time period for people's faith. So for me, I was like, this is what I believe, but why do I believe this? So I did a lot of research into Christianity, into other world religions, because I was sitting in a religion class because Liberty is a Christian university, and you have to take these Bible courses and stuff. And I was like, we were learning other religions, and I was like, every single one of these religions thinks they're right. And I was like, what makes us the right one? So I started doing a bunch of research into them, and just from like a comprehensive analysis standpoint, and every other world religion had one thing in common. It was all about works, working your way to heaven, working your way to paradise, working your way to the afterlife. And Christianity is the only one where Jesus came, lived a perfect life, and came to us. So it wasn't about our works, but the work that Christ did for us on the cross, dying for our sins. So for me, I was like, if it relied on me and the works that I did, how will I ever know if I've done enough? And I have that conversation all the time with other people of other religions. I'm like, how do you know? You're on your deathbed, and how do you know if you're saved? And their answer every time is, I'm not 100% sure, I hope. So for me, that just didn't do it. And for me, the surety of salvation through faith, faith alone, by grace alone, is really what did it for me. So ended up playing at Liberty, playing college hockey, and then I played pro after for 3 or 4 seasons, and was able to, well, I say one more thing about Liberty is when I was at Liberty, I always say before Liberty, I was a hockey player who just happened to be a Christian. And after Liberty, I was a Christian who just happened to be a hockey player. So that was a huge shift in my life where my identity changed from Zane the hockey player to Zane the follower of Jesus. My time playing pro after Liberty, I considered myself a missionary to the hockey world where I played in some NHL systems, never made it to the NHL, but played in their minor league teams and development programs. And then I played in Europe and Germany, Hungary, and Finland, and had a really good ride. And that kind of led me to the business world, which I'm sure we'll talk more about.
Yeah, I mean, that's awesome. It's crazy. You've had the ride, and the number of times your passport's been stamped has been quite a few, right? Which is fun. One thing I want to ask you is when you were entering Liberty, when you're first going in there, what did you think was in your path? Did you say, all right, I'm going to be a pro hockey player. This is why I'm here, and this is what I'm going to do for the next 10, 15 years of my life? Or did you have something in mind? Was real estate on your mind at all at that point? And then how did it change post-graduation?
Yeah. So Liberty is actually club hockey. So it is a much lower level than I ever anticipated playing my whole life. And I never thought I would play club hockey. I always thought I was going to go NCAA Division One, or worst case scenario, there's no NCAA Division Two, so NCAA Division Three. Um, and that was kind of the goal growing up. But the Lord had different plans. I ended up having an injury my last year before college, and it led me to Liberty. And when that kind of happened, and I didn't go NCAA D1, I was kind of like, okay, well, I'm probably just going to play 4 years here, and that's going to be the end of my career, because no one had ever kind of taken that next step. So I worked hard over those few years and had some good seasons, and then I did well enough that I was actually the first player ever from club hockey to go and play in the ECHL. So that was a huge honor and something that I never anticipated. Really, like, the Lord opened that door, because most NCAA Division One college players don't even go play at that level. So I was the first one ever to do it from club hockey and do that. So that was a huge honor. But I also kind of had the realization that I'm probably not going to play in the NHL, so I need to have a plan for after hockey. And I did internships throughout college every summer. And I knew I wanted to be in real estate. So I did real estate internships at a development firm, at a brokerage firm, and at a private equity real estate investing firm. Just learned as much as I could, read as many books as I could, listened to as many podcasts as I could, um, and just educated myself in as many ways as possible to kind of prepare for the world after hockey. And then I ended up working for that private equity group um, for about 6 years that I did the internship with, and worked for them throughout college, worked for them throughout playing pro. And then when COVID hit and kind of sidelined the pro sports world, is when I took the full-time step into uh, that company. So that was the transition.
That's awesome. I'm just curious because that's pretty cool that you were able to play club hockey, and then it's called ECHL.
Yep.
That's what the and so you're unique in the sense that you were able to do that and get to that level. What's something that you did during that club phase that put you in a position to and it sounds like you had an injury, right? So you had an injury, you go to Liberty, and what is it that you did that put you in a position to play at that level that's unique?
Yeah, I think at the deepest root of it, I have the desire to be the best, and I'd never stopped training. So like, leading up to college, I was training every summer, training with pros, training with college guys, pushing to get to that NCAA Division One route, which didn't happen because I broke my knee. That was my injury that kind of led me to Liberty. But I broke my knee and went to Liberty, and when I got there, I was just like, hey, this might be a little bit lower level than NCAA Division One, but they take it really serious at Liberty. It's a very renowned program for club hockey. I mean, every other sport on campus is NCAA Division One, so like it's a great campus, very well funded, and we practiced every day. We had full-time trainers, full-time staff. Like, we had a $20 million rink with a jumbotron and 4,000 fans a night. Like, it was real hockey.
Like
Yeah.
legit club hockey. I've never heard anything like that, man.
No, it was legit. Like, we had as many sticks as we wanted. We got treated like an NCAA Division One team, and it was not every club hockey team is like that. We were very well funded, but for me, I just kept pushing. Every summer, I went up to Michigan. I lived in Michigan for a few months to train, and it's just because I wanted to be the best. So I was the best. I was on the club hockey all rookie team. I was the first team All American. I led the league in points, and I led the whole country in points for defensemen. I had like 60 points in 30 games as a defenseman, which is a lot. I don't know if you know about hockey, but I had a lot of success, and it was fun, and my team was successful, and I had a lot of good guys around me, and grew a lot on and off the ice. But for me, I just never stopped pushing it, and the competitiveness and desire to be the best is kind of what led to that, and that's segued into business as well. I have that same desire.
Yeah, like what lessons have you learned from the hockey rink going through trials and overcoming them, and then just outworking everybody that you've been able to apply now in the business world as well?
Yeah, I think I say this to everybody. I think sports and business have so many crossovers, and like you can look at the sports world and the business world, and there's just so many correlations. But the biggest one for me is learning how to lose and move forward. I think in sports, especially hockey, when you have a 40 to 50 game season, you have to know how to lose. You're not gonna win every game, and you have to know how to roll with the punches, get knocked down, and then get back up. And how are we gonna get to the next one and win the next one? So, taking those losses and turning them into learning opportunities is something big. One of my favorite quotes is, "Success is moving from failure to failure without lack of enthusiasm." So if you can keep that same drive and enthusiasm that you had, you'll be successful. And for me, like, that quote was, I could have been like, "Oh man, I didn't get NCAA Division One. Like, I'm just gonna kind of sail it in and kind of smooth ride through club hockey and just kind of coast." For me, I was just like, "Nah, this is a failure, for lack of better terms, failure, that I'm just gonna grow through and see it through the end." And I've done that through my whole hockey career, even through pro. I got cut so many times, I got traded so many times, I got released by teams, picked up by others, and it was always an opportunity to have a new start and uh, just look at it as a new opportunity.
That's cool, man. I love that quote. Thanks for sharing that. And congrats to you in that career and what you've done so far. You mentioned when you were studying at Liberty, you always had an interest in real estate, and that's what led to the internships during the summer. Um, at what point in your life did you have an interest in real estate, and what was it? Um, what experience did you have with it, and why real estate versus other business avenues?
Yeah, great question. I was sitting in economics class, like either my freshman year, I think it was my freshman year, and I was just bored. I'm not a formal education guy, but I was sitting in a econ class, and I was just like, this is boring. So I went on Google and I Googled the 100 richest people in the world, and was looking at the list, and I was like, kind of doing a comprehensive analysis into what do the richest people do, and they had either one of four things: they either inherited it, they either were in tech, they either created a service or product, or they were in real estate. And I couldn't do those first three. I didn't really have any interest in any of those three and didn't inherit it. And then real estate, I was like, oh, that's something I could do. And my parents owned single family rentals growing up, so I kind of understood cash flow. I understood why owning real estate was good. So that's how I kind of fell on real estate. And um, I just started doing internships, started reading a bunch of books, started doing a bunch of self-education. I learned a ton through YouTube and podcast and just self-education. And for me, I was like, okay, this makes a ton of sense. I understood the thesis behind business and appreciation and using depreciation as a tax shelter. Um, and then the cash flow that you can create through it. But more so, like, how it started was just like the richest people in the world do it. And even if you are inheriting the money or creating a tech company or whatever, like, they still own a bunch of real estate. That's just not their primary source of income. It's a great way to grow their wealth. So for me, if you look at the richest people in the world, I'm just like, what do they do? It's kind of like being an athlete. You can say, hey, what do the best players in the world do? You go watch them on YouTube and you try to emulate it yourself and go practice it. It's like reverse engineer it from where they are to where you are, and how do you get there? So I did the exact same thing and said, what do the best in the world at business do? And how do I create that from zero?
Oh, that's awesome. I think I love that. Brian's getting into golf. I'm a big golfer. Reverse engineering Tiger Woods swing, easier said than done, and we wish we could get there. But it seems like you got there with hockey somewhat, which is cool. Uh, Transitioning kind of to your career now and what you're doing at Freedom Commercial, the firm that you were at before, I know that you're focused now on triple net primarily. It's like your big focus, and you've got the vision behind it. And I'd love to hear more about why that. The firm that you were at previous that you were working with for, you said, like those 6 years, what asset classes were they in, and how did what they were working on influence your decision to focus on where you're focusing now?
Yeah, so that firm, yes, let me back up a sec. When I started working there, we had 3 employees. I was the third employee, and we grew to about 20 plus. We grew from $100 million of assets to over 700. So that was over a 4 to 5 year period. and it was just fast growth. We grew a ton. So that was a really fun part to be a part of. We had 3 branches at that company. We had existing multifamily, value add multifamily, going from C class to B class. We had ground up development and office space to multifamily conversion development. And then we had the triple net, we call them the CRE funds, but triple net branch. So we had 3 branches. I ran the triple net branch entirely and basically I did all of the acquisitions, finding all the debt, doing all the tenant relationships, all the broker relationships, and really was able to grow into that. And the president of that former company gave me the autonomy to grow into that, which was a huge honor and something that I know most people in their 20s don't have the ability to do. So that was awesome. Grew a ton there, but those were the 3 asset classes, and I was able to learn a lot and kind of basically grow a company within a company. And that's why when I started Freedom Commercial Real Estate, I went straight into the stuff that I know best, which is triple net lease space, and didn't want to. I've seen too many people fail by chasing the dollar and going after things that they don't know, they're not professionals at or not experts at. And to me, I was just like, yeah, sure, I could go make a bigger dollar amount somewhere, but I'm going to stick to what I know, which is triple net leases, and be an expert at it, and grow from there.
Dude, that's cool. Before we get like into the triple net as a whole and an asset class, I think what stands out to me is that leader of that company that gave you the autonomy to, as a new graduate, really, it sounds like you were finding the deals, you were underwriting it, you were getting the debt, you're getting, I don't know, from a, capital raise standpoint, but it just feels like you had a ton of autonomy. What was it about that leader that we can learn from as we in our careers have new younger employees or just not as experienced employees come to our organization that can really give them an opportunity to shine?
Yeah. I mean, it wasn't from day one that I had the autonomy. I think I had to earn that trust, and I had to, slowly um, earn that. It's like, if you have a dog and you want to train them to walk without a leash at some point, you slowly wane them off the leash. So, when I first got there, he taught me how to underwrite. He taught me what to look for. He taught me what he looked for. And then I would go find a deal and do it myself and bring it to him, and he would verify it or whatever and make sure, hey, this is a good one. And then it turned into me just finding the deals and doing everything and kind of just learning what to look for on a deal and everything. And then also, like, he was busy with the development stuff. He was kind of running the development branch and the multifamily branch more so. So for him, it allowed him more time freedom to do that. But your question was more so like, why did he trust me? I think the trust was earned, and earned slowly over time, and it wasn't just given day one. But once I earned it, it was pretty freely given. And I think I proved that I could do it at a successful level that investors were happy with. And he also knew, like, from day one, I always told him that I never wanted to work for anybody. My goal was to be him, essentially. And he allowed me the freedom and ability to do that within his company. And I was an equity partner. So basically, he allowed me to do what I wanted while being under the umbrella of his company, which I was totally fine with. I don't need my name or attention on it. But at some point I was kind of like, okay, well, I'm doing a lot of this myself. Let's just go do it. So that's kind of how I landed here. But yeah, I'm very grateful for the opportunity that I had there, and I grew a ton, learned a ton, and definitely wouldn't be where I am today without that opportunity.
I think that really speaks volumes to who, I don't know this guy, but you have a lot of leaders in the world that would be somewhat scared when they have that conversation of new younger guy comes in and says, hey, I want to be you. I don't want to be an employee of you for the next 5-10 years. I want to be who you are. And I feel like a lot of times that turns people off, and you got to have like the right person that can take that desire and build it, and not be afraid of, hey, this person's not going to be my competition in the future. It's like, if I can help somebody else win, that's just good for life, right? And it's kind of backwards to what the philosophy is common today. I think it's, if you hear that from someone, it's almost like they're like, okay, then you're not part of my team anymore. Like if you're just going to be my competitor, then get lost, you know? So
Yeah.
that's cool that he was like willing to be able to still train you and help you learn what you needed to learn to start your own thing.
Yeah, absolutely.
I'm curious, like over those 6 years, the first couple years when you started to get that autonomy, um, and going back to your quote, and I can't, you know, I can't restate it like verbatim, but it's ultimately it's being able to navigate the failures and just keep moving. I'm curious, were there some failures in the beginning as you thought about, whether it was buying the wrong property or your assumptions in the underwriting were incorrectly, or your estimated returns, you just didn't hit pro forma and it really caused some friction with your LPs. Like, was there some of that, or was it, I'm curious, like, how did you really learn it to where then you could go do it your own?
I'd say yes and no. This was back in probably 2018 when everything was rising.
Okay.
So it was pretty easy to find a deal and make money on it. But, I had a lot of experience because we also owned a property management company. So I did all the pro formas for them while I also did the underwritings so when I first started there, we only did multifamily. And then we grew from multifamily to triple net and then triple net to development. So when I started there, I was doing all the underwritings for the multifamily acquisitions and I was doing all the pro formas for the third party management company. So I was learning both sides. I was learning the investment side and I was learning the management side, which if you can combine those and really understand how to underwrite from both sides and get the projections right, that's how you nail down the numbers. So, um, you know, I learned a ton and I was by no means perfect and I learned every day. And I'd say like in the moment back then, there was a much wider spread of you could miss and still win. And some of the deals that we may have bought back in 2019, 2020, we aren't seeing the ramifications of them until today. So for example, like we bought some property, like here's a great example. We bought some Rite Aids back in 2020. Rite Aid is a drugstore, a Midwest and Northeast drugstore. I think they might be a little all over the country, but that's primarily their region. And we chased the yield, and I chased the yield of, hey, we're buying this at an 8.5 cap. It's going to make our investors about 15% a year because the debt was about 3% on it. Cap was 8.5. It's a huge spread. So we're making a ton of money, but instead of chasing the yield, I should have chased a higher quality tenant and, something that was more stable. But we got that yield and we kind of lucked out because those properties were on some really good pieces of real estate that Friday ended up going bankrupt in 2024. And after that, they denied their leases. And since then, we've had other tenants want to occupy those locations. So since they were in good locations, we kind of lucked out. But you know, I'm not going to toot my own horn and be like, I knew that that was coming. And, I was looking at the location. I knew that somebody else would come in, but I learned from that. And I'm like, hey, now when I buy a property, I say, okay, well, what could this be if it's not a Rite Aid? What could this be if it's not a Dollar General? What could this be if it's not a Starbucks? So that's just a form of learning and growing and being like, okay, well, I missed that back in 2020. Thankfully, it worked out for us. And let's make sure I don't miss that again. So I'm sure there's something that I'll do every single year that I'll look back on and be like, man, I missed on that, but I'm not going to make that mistake again. So I think like the best way to learn and grow in life is through learning through mistakes. And the best way to do it is by learning from other people's mistakes. So that way you get the actual blunt force of it. So, I'm not, uh, I think it's okay to miss, but you don't want to miss often with investors' money and other people's money. But the best way to learn is by growing and missing. The better way to learn is by learning from other people's misses. So
I think it's interesting what you said, like two really big important things in your space that you're focused on now. One, location, obviously, and then two, the quality of the tenant. I mean, you've got a ton of LinkedIn posts on this of like what you look for in a deal and what makes it good. And it's so cool to see you build in public because you're giving insight to people and they can kind of learn from that and like learn from your mistakes too. Of those two, do you prioritize one more than the other? Would you prioritize location over quality tenant or quality tenant over location?
yeah, so I tell investors there are three things when we acquire a deal that we look for. One, strength of location. Two, creditworthiness of tenant, and three, yield. Because those are the three things that we're trying to build. But the good thing is how we structure our offerings is we structure everything as a fund. So we have 10 to 20 assets in one fund. And for us, since we do it as a fund, we have the ability to blend those three in different levels across 15 to 20 different assets. So one property might be a higher credit tenant with a little bit lower yield on a really good piece of real estate, but we might go over here and maybe have a higher yield on not as good of a real estate, but still have a high likelihood of renewing. So like I'm not dancing around your question, but
Yeah.
we have the ability to kind of pick and choose what we want on those 15 or so properties in a fund. But if I had to pick one, I would say I would pick the location, because a good location, there will always be a tenant that will want to be in a good location, no matter if it's a high credit tenant or a low credit tenant. But we only work with high credit tenants. But a good location is valuable at all times and will always go up in value over the time.
Yeah, you had that experience with somebody vacating and then a Chick-fil-A coming in, right?
Yeah.
Can you just
So that
tell
was
me?
one of those Rite Aid properties. So we had the Rite Aid vacate, and we had a ton of interest in that location. Yeah, Chick-fil-A was one that showed interest, and they're such a good tenant. So it's like they know what they're doing, and they have strong success and strong real estate teams. So we did something right on that one.
That's awesome. So, can you walk us through like after being at that company for 6 years, what was it that influenced you to say, okay, I'm gonna go and build freedom, and I'm gonna build it by myself. I'm gonna work for myself. Walk us through someone that might have a lot of experience in real estate and want to go and do that. Like, how did you go about doing that?
Yeah, I think me and the president of that company just had some different views on kind of how to run things, and just transparency with investors was a big thing. And I'm a big believer, especially because I was an investor in a lot of the deals, and so was my friends and family. Like, and I just had a different view on kind of what we should tell investors and how transparent we should be with them. And I was just kind of like, okay, we have a different view. Like, I'm just gonna go start my own thing and be the gold standard of transparency and gold standard of everything I can create. So, it was just kind of time to part ways, and um, you know, it was time to roll. And also, like, at that point, after having done it for 6 years, I was kind of like, okay, I have the experience, I have the ability to raise capital, I trusted my underwriting abilities and my portfolio management abilities to go do this myself and kind of take the risk. So those two things blended is what kind of led me to start my own thing. And also, when you're working for somebody else, um, the 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 upside is capped, because ultimately you work for somebody else. So when you work for yourself, there's a much higher risk, but also a much higher upside. So that competitiveness and that competitive drive in me of like, okay, if I go put in the work and grind like I did in hockey and do the same grind in business, I can grow to exponential sizes. So that's what I saw, and I saw an opportunity, and I took it.
And when you first started doing that, when you acquiring your first property, did you set it up as a fund structure right away? Or did you start by syndicating a deal here, a deal there, and work your way into that fund structure?
I started right off as a fund because that's what I had done, and I knew how to do it. And a lot of investors knew that that's what I was doing. So, and that's what they want. And that's what I want as an investor. I'm like, okay, what would I want as an investor? I would want diversification. I would want cash flow. I would want communication. I would want transparency, and I would want a high asset class that has good yield. So I built that, and investors are very happy with what we do and how we do it, and why we do it and everything.
How question. So, like, looking at your LinkedIn, you want to build a real estate firm centered around Christ, um, which is awesome. How are you like implementing that? Um, in the sense of like, is there like company prayers? Are you guys studying the scriptures as a team? Are you just kind of only recruiting believers, right? Like, how are you able to tie in kind of a religious figure in Jesus Christ with real estate, and then just create an environment where people can be comfortable, if they might not believe in the exact beliefs of Christ, right? Like, how are you doing that?
Yeah. So I'm pretty bold about my faith, and I am not shy about talking about it. I think that it's the most important thing in this world, and I've never really been super shy. I think this life is temporary, and I don't think I'm ever going to regret talking about Jesus in a million years. Um, so a big thing that for me, I try to be just different in terms of like high transparency. I try to follow through on what I say. I try to be a man of my word. Um, I try to, you know, just be different in the business world. It's everybody in not everybody. A lot of people in the business world are just very greedy and chasing the next dollar, trying to squeeze as much money out of you as possible. So I think just being different is one way. Um, And kind of like our long-term vision is to start a nonprofit charitable fund that does exactly what we do and buys these properties that are cash flowing, investment grade quality tenants. So the nonprofit will own the properties, and then that nonprofit will fund missionaries around the world. So
Right.
that's more like the big picture is like we're going to, right now we're for profit, we're for investors, we're making them money. And the name behind Freedom Commercial Real Estate is we want to help investors get financial freedom, help them on their journey towards financial freedom, and help them. Uh, we believe that true freedom only comes through freedom in Christ, and the Bible verse where the Spirit of the Lord is, there's freedom. That's like that was Liberty's verse, but it's like it's true. Where like true freedom, in my opinion, only comes through Jesus. So like our long-term vision is to help the world see that true freedom through Jesus. Our short-term vision is to help investors get that freedom through financial freedom, and then they can go use their money to chase their passions, whether it be time with family, supporting different nonprofits around the world that they're passionate about, making more money. Like they can do whatever they want with their money. We're trying to help them there. But in the future, we want to do exactly what we're doing, not for profit, and every dollar we earn will go towards funding missionaries around the world.
That's awesome. It's just admirable what you're doing, and I'm curious. Like, sounds like transparency is what led you to build Freedom, and transparency is like a core value of your company today. Can you provide our listeners with some like practical implementation of like what does that look like at Freedom? And our group is kind of working internally on how frequently should we be communicating with the investors? What does that look like? Is it in-house meetings? Is it email, newsletters? What is it? What have you seen as like the best practice for really being transparent that our listeners can take away?
I think it's a few things. I think it's honesty with the good and the bad. I think it's accessibility at all times. I think it's quickness in response. I think it's just telling what's actually happening. So all those things combined is kind of the transparency that we try to build. But I talk to other investors all the time and they're like, I was in this deal and, I didn't hear anything. And then I got an email out of the blue that said we were doing a capital call. And it's like, if a capital call is coming, investors should know that the property is not doing well and they should at least know. So I think there's a lot of operators out there who are afraid to share the bad. They're afraid to share that the property is not doing as well as they anticipated and that their projections were they're not hitting their projections. And, that's not okay. You should you should own that and tell investors, hey, we projected the NOI to be at 100K. We're only at 80K, so we can't cash flow. And that's why we're not cash flowing, and we're doing what we can to get there. And I guarantee, well, most investors I talk to are like, if the operator just told me what was going on, I would be totally fine. Like, I know I'm investing into something that has risk. Like, every investor knows that there's risk in the investments that they're getting. What they don't like is when operators don't tell them what's going on, even if it's bad. They're like, just tell me. It's my money. I know I invested in it. Like, I know that there's potential for it not to do well. Or if there's just a shift in kind of the business thesis or things have changed. So I think that's a big thing. We do monthly reports. So every single month, we send out reports to all of our investors and we say, hey, here's what's going on the fund. And a lot of times there's no real update because it's like no news is good news. Everything's going good. It's been a slow month and that's great. Here's your distribution. So we do monthly distributions, monthly reports, and some months we might be like, hey, good news, we just got a lease extension and we're going to look to sell that property. Or good news, we got a lease extension, we're looking for a new loan. Or there might be, oh, bad news, this tenant is vacating and we're going to go find a solution for it. So I just think like being transparent and telling them what's actually going on in your weekly meetings at the office, like the office knows what's going on. It knows if there's bad or good or whatever, like the property managers know. So why not tell investors? My opinion and what I've seen is the more transparent you are with investors, with good and bad, the more trust they have with you.
Mhm.
So, and the more trust they have with you, the more likely they are to invest. And then on top of that, I think a big thing is accessibility. If an investor sends you an email and they don't hear back from you in 2, 3, 4 days, like that's ridiculous. They should hear back from you within 24 hours and or less. And that's one thing that a lot of investors have said that they love about Freedom is we get back to them within a few hours, honestly, maybe even less. We prioritize that for our investors. In the end, investors need to be first. And I think a lot of operators and sponsors or syndicators or whatever you want to call them, they don't put investors first. They put themselves first. And that's why you're seeing what you're seeing today with so many, um, just operators kind of going south.
Yeah. I mean, I've never really thought of transparency being an attribute of Christ. It's not like a very common one that you would talk about in like a Bible study, right? But if you look at his life and especially connecting accessibility with the attribute of transparency, because at the end of the day, Christ was the most accessible person, despite being like the busiest person ever on earth, right? And no matter what any of the 12 were going through at the time, they could come to him and he was accessible and he would talk to them and he'd meet them at their level. And I think that's such a cool practice to learn about how we can apply that in business with, in our case, it's investors mostly, right? Going to their level and meeting them with what they need, because every investor is different at the end of the day. Just like every member of the 12, all of his apostles were different at the time, right?
Yeah. And when an investor is trusting you with hundreds of thousands of dollars, you should be accessible.
Yeah.
Like, that's a
Yeah.
big thing. Like, a lot of people are trusting you with their retirement funds, with their kids' college money. Like, it's a big responsibility. And I think a lot of people just don't see how big of a deal it is that you're handling other people's money. And it's like, it's a big deal. You need to treat it as such.
I thought I have a question is, and I don't know if this is in the triple net side, but in multi, there are deals that are on the market, but none of them are really penciling. And that's for various reasons, whether it's the interest rates, whether it's the seller that still has an expectation that they can get the value that they got, in 20 to 22, um, and everything in between. I'm curious, like, as far as deal flow and triple net, it sure feels like on LinkedIn, you're getting the deal flow and really helping investors deploy capital. What are you doing to kind of find those deals? And is that the case? Like, is your deal flow in a good space where you're underwriting a lot and frequently, and you're finding deals that pencil? And how can other sponsor groups like ours, whether it's triple net, multi, office space, kind of apply some of the things that you're doing to get deals that are penciling?
Yeah, I'd say my deal flow is absolutely crazy. I probably get 100 to 200 deals a week that cross my desk. And the reason I have that many is because brokers know that I'm a legitimate buyer. I've done about 70 of these deals over the past, 6+ years. And I've done deals with pretty much every major broker in the country. And they know that I deliver on what I say. So if I do what I say and say what I do, that's what a broker's looking for. They're looking for somebody who has surety of closing and knows what they want and moves fast. We close on our deals in 40 to 50 days and we deliver. So that's a big thing, is just track record of success with brokers. And that's where all the deals come from. So I'll have brokers every day sending me deals off market, sending me deals that they have on the market that they're about to list. What am I looking for? It's kind of over inundating, but um, that's a competitive advantage that we have for investors, is we get the access to the best deals on and off the market that most people don't have access to because of my track record. So, if you're out there yourself trying to buy your own Dollar General, you're going to be looking on LoopNet, and everybody else in the world is looking on LoopNet. So you're probably not getting the best deal out there. So that's a kind of big competitive advantage. And then, because of that, we're able to get the best deals and at the best cap rates. And sometimes we even get a discount on cap rate because we have surety of closing. So if there's a deal listed for $1 million and there's two offers on it, one at ask at $1 million from somebody else, and then we come in at 950, and we've worked with the broker, they'll probably give it to us as opposed to somebody else who they've never worked with, because they'll tell the seller, hey, this person delivers, it might be 50K less, but it's actually going to close, and I've done a deal with them, and surety of closing is very important. So we've had other deals where in that scenario they've gone with the higher bid, it doesn't close, and then they come to us later and we go, okay, well, now our time is valuable, so we want to pay 925 for it now, and they're like, oh, okay, whatever, we'll take it. So it's like, we've had stuff like that happen. And I think just having that deal flow and that track record and access to all the deals in the country is something that we have. And then in terms of deals penciling out, when you think of these deals and the high credit tenants we're working with, like Dollar General, Starbucks, AutoZone, Sherwin-Williams, these are multi-billion-dollar companies. And from a debt standpoint and a lending side, every lender in the country wants to give money on these deals. So we typically have 4 or 5 banks that are bidding on the deals, and we're just beating them down against each other to get the best terms on the market. So not only are we getting kind of the best cap rate deals and the best deals available, but we're also getting the best debt. So our spread is higher than most because of the blend of the two. They're penciling out. They're not penciling out as lucrative as they did back in 2021, 2022, because the spreads were 300 to 400 bips. But today, we're getting 200 bip spread on the deal, maybe 250 depending on the deal. Sometimes might be 175, but we're still cash flowing and we're doing good. And the hope is that over the next 12 to 18 months, we refi and cash flow at a higher rate. So long-winded answer to deal flow is great, and it's because of our track record.
How about for those who are just getting started and don't have the benefit of having your track record? Somebody just wanted to get into the industry, right? And I don't want to go look at LoopNet for 8 hours a day and just rack my head against the wall. How can people getting into it differentiate themselves to have a competitive advantage compared to the people that are also starting out, if that makes sense?
I'd say my first answer is you should just invest as an LP and do it with somebody else and then get the experience there, but that's not what you're looking for. I'd say the second answer is you have to have relationships with these brokers, and you have to create legitimacy. So if you show a broker and you're like, hey, I'm looking to buy a Starbucks for $2 million, and you send them a screenshot of your bank account with $2 million, and you're like, I'm ready to go. Let me know. I have my lender. I have everything lined up. They're going to see that and they're going to be like, okay, this guy's legit and he knows what he wants. He gave me a buy box. And if I find a deal like this, I'll send it to him off market and we'll give him a shot. So I think just building that legitimacy is something that, as somebody who doesn't have that track record, they could build it through proof of funds. They could build it through, partnering maybe with somebody who has that experience or track record, or maybe just being consistent with the broker without being annoying. I think that's something that could help you, but you're going to have to perform. And if you do that example and then you mess up, then you're probably never going to get a deal from them again. And you're going to be that guy who said you were legit and then
I'm not
didn't get the
legit.
deal done. So it's like, you got to do what you say. Otherwise, it's a small world out there. And if you mess up, it's going to be hard
Everybody
to,
knows about it pretty fast.
yeah. What is it? Another one of my favorite quotes is trust is gained in drops and lost in buckets. So slowly and slowly you can gain trust with a broker over time, but if you screw up on a deal, it's going to be back to ground zero.
That's awesome, man. I think both of us appreciate that. We're about a year and a half old, and so we're really trying to just leverage our relationships and trying to be honest and have integrity and show that we do have a surety of close. And so appreciate you sharing that. Just being cognizant of time, we wanted to kind of pick your brain on how you approach LinkedIn. And if you look back on your career and being in the commercial real estate space, like what was it that influenced you to be active on LinkedIn, and how has that blessed your life?
Yeah, I mean, I never really posted on LinkedIn before uh, December 25th of 2024, so about 5 months ago. Never posted on it, maybe like once a year. And I was just on LinkedIn kind of in November and December of last year, and I saw all these operators and sponsors like posting all the time. And I was like, And the analysis part of my brain was like, there's no way they're doing this just out of the goodness of their heart, and there's got to be a reason. So I started calling them and getting on calls with them and being like, hey, like, why do you do this? They're like, oh, well, we raise money through it. Oh, well, we get new investors through it. Or, oh, we're just growing our brand. And I'm like, okay, that makes sense. So I was like, okay, well, I'm gonna try it, and kind of did a bunch of research into LinkedIn and how to do it and the algorithm. LinkedIn is actually a very, very complex science, and if you know how to maximize the potential of it and do the research into how to grow, there's a science, and there's times to post, there's how to comment, there's just a lot that goes into it. So I did an analysis of it, and I just made a post. And I think what I've seen is all of my followers, and I've grown a ton. I've grown from 1,000 followers to I think I have like 12,000 now in 5 months, and I have like 5 million views, and I've reached like 3 million people. So it's been absolutely crazy growth, and huge blessing. Like, I could do what I'm doing and have zero success, but I think the Lord's favor has been on it a little too. And you know, people like the numbers. I've heard that very consistently, is people like the numbers of the breakdowns. I'm very transparent with what we pay for things. I'm very transparent with what I like about things. Like, I'm just sharing my knowledge, and I don't think I'm greedy with my knowledge. And I think other operators might kind of keep some stuff close to their chest, but for me, I'm like, there's enough deals out there for everybody to do, and I'm just out here doing this for fun. And because of that, I've raised a lot of money from new investors. I mean, I have probably 15 plus new investor calls a week that just find me on LinkedIn, and it is incredible growth. And I don't think it's slowing down, and it's been great. I mean, I've had college kids reach out and be like, hey, like, love to see that you're following your faith. It's really admirable, because it's hard for me in college to do that. And like, or new people in the workforce who have been like, hey, like, how do you implement your faith into business? And like, it's hard for me. I'm in an office of all non-believers. So, having conversations like that have been great, but it's been a cool platform. I've enjoyed it. It's a ton of work. I spend hours a day on it. It's always up on the background of my computer, so I'll send emails and then respond to comments, or send emails and make a post. It's a big commitment, but I've just kind of looked at it as, I'm in the business of raising money and buying deals, and LinkedIn is how I'm raising money right now. And I'll do it until it doesn't work.
We're trying to get more active on this space, and I think we can learn from you for sure. Yeah, I appreciate what you post 100%, because it's very valuable, and again, transparent. It all comes back down to transparency and not being afraid to give up a secret sauce of what I do, because at the end of the day, it's not really that secret, and it's not that much sauce, right? So everybody can do it, but the more you share, the more you receive. So I think that's awesome. Thank you
Yeah.
for doing it.
Yeah.
You're welcome. Thank
It's
you.
awesome, man. I think I don't know, Henry, if you have any other questions, but to close this podcast out, Zane, this maybe someone's asked you this before, maybe someone hasn't, but if you could be present and witness any of Christ's miracles on the earth, what's the one miracle that you would sign up for and to witness, and why?
I've never been asked that. It's a really good question. Which one is the coolest? I think two.
Okay. I like
You're cheating, Zane.
Man, I love when the paralyzed man was dropped down through the roof by his friends, and Jesus healed him right then. It's like, what kind of cool friends do you have that will do this for you? But also, what kind of belief did they have to be like, this guy can heal our friend, and the hope that they had that, like, we have no hope in this world. Like, this guy says he can heal our paralyzed friend. Like, let's go drop him through the roof.
Yeah.
Like, that's crazy. So it's like, man, if I was there, that would be amazing. And then I think the other one is the one where there was like the crazy man who was sitting at the front of the city entrance, and he had been there forever, and everybody was like, that's the crazy guy, like, he's just the city crazy guy. And Jesus healed him and made him not crazy, and then they saw him the next day or a couple days later in his sane mind. And like that would just be crazy to be like, that's been the crazy guy that I've seen for the past 20 years in my life. Every day I enter the gate, and now he's just walking around like he's normal. And I think those would be two things where I'd be like Jesus changed just their entire lives. And I think seeing that would be like, I'd be like, whoa, like this guy is who he says he is. And then obviously the resurrection, but that's the easy answer.
So
But
we
I
got
think those
three.
two would be like, man, that's Bob, the paralyzed man, and now he's walking. What the heck? Or that's Jim, that's the city psycho, and now he's over there having a cup of coffee with his legs crossed, reading a book. It's like, I think that would just be crazy to see, and I think those would be pretty cool.
That's awesome, man. Well,
Yeah,
Henry, I don't know
Good
if you have
question.
anything else, but Zane, I just want to say thank you, dude. I've been inspired today to just be more of a believer, be more transparent, have integrity. You've motivated me to just work hard and be driven, and I appreciate the time. And I'm really looking forward to watching you succeed and grow. And we just want to thank you for this opportunity.
Yeah,
thanks.
likewise. I think awesome. Just amen to everything that Brian said. And I think you're the man. So keep doing what you're doing. We love it.
Thank you. I appreciate it a lot. LinkedIn's cool, and meeting y'all would have never happened without LinkedIn. So it's like, I've met a lot of people and had a lot of conversations that I never would have had. But when you can hop on a Zoom call and see face to face and talk about Jesus and the things that you love and you're passionate about, it's like this would have never happened if I would have never stepped out and done stuff on LinkedIn, and also without technology in general. So thanks for having me on, and happy to help any way I can. And I guess, I mean, if people want to get a hold of me, I always kind of throw that out there. I think, follow me on LinkedIn. Zane Schartz is a great place to go. Um, my direct email is zane@freedomcre.net. And that's our website, freedomcre.net. So would love to chat. Shoot me an email if I can share any information or kind of tell you a little bit more about what we do, and or just talk about Jesus. I think anything would be great. But yeah, thanks guys for having me on. Appreciate it.
Thanks, Zane.
Thanks, Zane.